Hi, everybody. Eddie here. Going to do a market update for next week. So last week we have a huge sell-off. The chart, what looked to be fairly bullish, turned out very bearish, right? Most of that was has to do with the Silicon Valley Bank issue, where the Fed actually came in and halted their trading, and now they have taken over the company, right? So it's always bad when banks starts to fail, and this is, we don't know if this is going to have a domino effect on the markets. Is it going to trigger other sell-offs within some of the other regional banks, or if this is just a one-time time event from this particular bank. So it's going to take a few weeks to get this resolved, and we probably won't see what the market's going to do until those time actually happens. So for now, the chart is very bearish, right? So we came up, we bounced off this very key important level, and then it went up, and we have that inverse hammer there. So we got river swings, and then we trade the short side, and we got down here, and we got this reversal hammer that could save the day. So on Thursday, what looked pretty promising to go up, we actually get rejected once that news came in, and we have a huge sell-off. And then on Friday, we have the jobs numbers came out, and it was better than expected, which is actually bad for the markets at this point. It's weird, but that's what he does. And then we went up and we tested that key level, tried to hit that 200 period moving average. I thought we were going to maybe make a run into the EMA, like around that 39.50 area, but it actually stopped around that 39.35 area and got rejected down. It got tested twice that day, and then it flushed right down after news that more news came out about the Silicon Valley, right? So if we look into the market, right here, you can see that we came up, we retested this area right here. This is from yesterday, right? On Thursday. So this is Friday. So in pre-market, I'm going to show you the ES chart so you can see pre-market. So in pre-market on the news, we initially pop, right? We hit a resistance, and then we got sold off, and then we found some support at the low previously, and then we bounced off that level, right? We made a low high, and then they flushed right down, right? So that after seeing that, that was actually fairly easy to trade with this push right here. My initial thinking was that we have a huge 3,900 put wall on the SPX, right? So we were opening close to 3,900. So I thought we were actually going to get a push up, probably try to hit 3,950. Because max pain for Friday was actually 4,000. So usually on a Friday, max pain actually works out fairly well. It doesn't always, but it actually works fairly well, or at least close to it. But we sold off significantly from max pain on Friday, which is absolutely crazy, right? So that's what happens when you have like these big news events come out. It can completely overthrow your trading plan. But actually, on Friday was one of my biggest days in my career. So I did really well trading it because it was fairly predictable on the price action. So this is why it's so important to not get married to your ideas and just trade the action, right? So right here at the open, right when we opened, we actually came down, retest. So the pre-market actually went up, and then it came down, right? So it came down on SPX. It came down to 38.80. So this was one of the key levels that I talk about in my market analysis every morning. So 38.80 was one of the levels. So we came down, we held on to 38.80, and we bounced, right? The first try is always a fake out. So it came and retested 21 period moving average, came back down, made a higher low, and then it broke through it, right? Once you broke through it, you aim for the pre-market high, which was look over here, you aim for this area. But so as soon as you start coming up to this area, and then you get the big engulfing red candle before it touches top, that was it. That's your out, and then you can start shorting it, right? So it was a fairly easy trade. I actually missed the big trade, which is all the way down right here, because in the first 2 hours right here, I made some enormous gains already because it was a very predictable trade. But over here, I didn't want to get back into my profits today, so I just stopped trading, and then I actually went back in later in the day for very small positions. But it was fairly predictable how this was traded. Your key area yesterday was that 38.80. So you can see we bounced off that 38.80 area multiple times right here, slightly above it, but 38.85, 38.80. So we could bounce off that level multiple times. And then finally over here, it completely broke down. Once it broke down, came down to test that 38.50 area, which is another key level. And then we came back up, retested 38.80, failed, and came all the way back down to 38.50 to close. So these type of price action is fairly predictable if you know your technical analysis, right? It's all about supply and demand. Once this was a key support area, once all those demand for the stock has been taken out, it becomes supply area once it breaks through. So it comes down and now it retests and then came back down, right? So what does this mean for next week? So next week is OPEC's quarterly option expiration for everything like futures, stocks, indexes, everything, right? So it usually has a very huge move on Thursday and Friday of that week. So you want to be very careful if how you want to play this, because right now we're in this big, huge waterfall. There is some big support around that 3,800 area, right? So if we do come down to 3,800, that's the area you want to look for reversal, right? I don't think we'll flush right through it on the first try unless like something really bad happens, like a few other banks get shut down or something, right? Unless some big news happens, it's not going to break through this area. This will be a very key support for next week to hold. So as it comes down to this area, it will be likely scenario that we're going to get some sort of a dead cat bounce. And it could be a pretty big one too, towards Thursday and Friday, right? So at the start of the week, it could get volatile. It could consolidate also around like somewhere between this 3,800 and this 3,850 area, right? If it does come back and retest this 3,900, 3,950 area to 4,000, right? Chances are it will fail this area the first try. So if it does come up and retest this, look for rejection of some sort and then flush right down to come back here, right? If we come down here first, look for a support bounce and come all the way up to maybe test 3,900 and then 3,950, right? That's the way you should play next week. That's why I would play next week. Unfortunately, I cannot train next week because I will be stuck in the hotel, but it's going to be a very interesting week, and it's going to define how the market is going to move forward this week, probably. Right, because we broke that 200 period moving average. We're no longer we're back in bear territory, right? So we're no longer having that hope of these higher high, higher low scenario. Even though this is still considered a higher low because we did not break this low just yet. But if it does break through, then it's done, right? It's done, and it's probably going to come back and retest the low here. So I can see this channel right here is kind of broken through it right now, temporary. Monday could change that by having a big engulfing green candle. But as far as right now, it's broken through, and really we can't really tell a direction until next week. So, but there's excessive selling and there's a lot of put buying. So usually when there's excessive selling and a lot of put buying, they tend to get squeezed at some point, right? So look for these key areas where you potentially could get squeezed, which is that 3,850 is a very important level, and this 3,800 is basically your last line of defense before the big potential to reverse back up. Right. So look for those trades next week. That's the way I think it should work out. This 3,800 area is also the 100% Fibonacci extension from this wave down. So it could come down and bounce off this area right here. And if it does flush through it, you know, you're looking down here at this 3,650 all the way down to 3,500 area, which is this October low area right here. So that would be fairly extreme to come down this area next week, but not saying that you can't, because we don't know how big this Silicon Valley Bank issue is going to be. We also have the Fed meetings and CPI reports coming out, so there's a ton of news that could have a major reaction at these levels. So the thing you should concentrate on is is at these key levels, how is it going to react, right? Is it going to bounce or is it just going to flush right through, right? If you just flush right through, you aim for the next level down, right? If it bounces, then, you got levels coming up. So that's where you should trade it. Try not to get too biased on a single direction, because in this type of market, you'll get killed if you have too bias, and you have that hopium in you, right? Because it's volatile. It like a single day could change a lot, right? You could be shorting like this looked like it was going to come all the way down, and then you get like these big, huge bull days, right? And you get these huge shorting days right here. You could get a huge bull day as well, like it did right here, right? And then you get like a big gap up or big gap up candle is completely 360 to move. So a lot of things can happen in this market when there's especially when there's excessive buying of options, like there's more and more USDT option buying now, so it can be very, very volatile intraday. And that's the way I love it. That's the way how I trade. I'm still sticking with day trading because obviously all the money is in day trading right now. There's in swing trading, it's very hard to do. Holding things overnight, you can lose sleep on that. So, although we do have very small positions that we opened on Friday because it was such a big sell off. So I did sell some puts to grab some shares at very cheap prices on some of the FANG names that we're going to discuss later on. But right now, just keep an open mind, concentrate on this key area of 3850 and 3800, and let's see what happens next week towards OPEX. All right, so let's take a look at the Qs. Qs are still holding up fairly well. It's just slightly below 200 period moving average, so it's not as bad as the SPX. The SPX is way below it, right? Mainly because banks are the ones that's dragging the S&P 500 down, because banks had a huge sell-off on Friday, especially the regional banks. I think it went down, the ETF went down like 8%, while the bigger banks went down only 4%. So those ones that are well capitalized will probably not have a huge impact. But those regional banks that are not as well capitalized, they could be in big trouble, right? And that could have a very negative effect on markets if things go really bad. So this really reminds me of 2008 recession, but it's not. It's very different, but it just gave me a hint of that feeling on Friday when those news come out. All right. So you can see right here, it's still holding this very key level on the Nasdaq, which is like this breakout area right here. So it's still holding above that, and we're still above the megaphone on the Qs. We're not on the SPX. So we broke through the megaphone on SPX. So on Monday, it really needs to save it. Monday needs to have like a big up day, and then maybe consolidate and break out. That's the only way to save this chart, right? Otherwise, if we get a test and then a breakdown, it's done. Like it's going to come all the way back down, and it could get very, very ugly. This is why like during weak seasonality, like end of February, early March type of thing, you want to be very careful when you're going long. So that I've been very cautious on that, and trading very conservatively. So I'm really glad that I did, because this flush down would have cost you a lot of money if you held on to swing positions on the bull side. So this is why like during seasonality, I'd be a lot more careful. If I see any type of reversal on weak seasonality, I tend to get out. So uh, anyways, the Qs, it's performing better than SPX. So just watch this area right here. This 285 area is very important. 280 would be like your bottom line, because that's the low of this consolidation right here. So you want to see it above this low consolidation. So if it comes down, you want to see it bounce off that area. You do not want to see it go back into the megaphone, right? So as long as it can stay above the megaphone, it can actually still continue higher. Usually April's a very strong month for the markets, but because of this news event, it can change that. So just keep that in mind when you're trading. But if you do see a big reversal before strong seasonality, that could be a pretty good play as well. So let's take a look at the VIX. The VIX had like huge spike on Friday. It went up to 29, right? And then it dropped right off. So we closed below 25, which is good. That means a lot of the panic selling, it came right back down. The volatility dropped towards the end of the day, right? So if you look, we have that big huge spike of volatility during the initial sell-off, and then it completely drop off, right? So that's a good sign. You want to see the VIX to come back down towards the low 20s. That will calm the market. That means that we potentially could go back higher. But if this continues to move up and actually test this 35 area, that means that the SPX is probably broken down and is near a support area. So those be the things that you want to look for, and it's good to see confluence of information. So if there's confluence, like supports right there, it's towards seasonality, the VIX is dropping, it's likely that could be a potential reversal area. Right. So let's take a look at the stocks. Apple is probably the best performer out of the bunch. It did not do too much. It did not drop a whole lot. We're still above the 200-period moving average. It is consolidating up here. The chart's not great. It is at the upper range of this channel. It does look like an inverse head and shoulders, but because of the market being weak, it probably won't play out. And then if it breaks down, it breaks like the low of 145. It could come all the way back down and flush down. But so far, it's still holding the 200-period moving average. So it's just consolidating. We'll see what happens next week there. AMD, same thing. There's somewhat of a double top pattern right here, a lower high on the daily. So that's never good. So it is still holding above all the moving averages right here. It is stack. The area that I'm looking at to see if it'll hold is that 72 area. This is a very, very key area. This will stay a higher low as long as you can stay above this area right here. So this is your low right here. So this initial low of the wave, and then there's a low right there, but it could come down and bounce off here and turn this into like just one wave. And that's the key area you really want to pay attention to. See it can break down this area. If it does, then it can come back and retest its 60s area. And if it does, I mean, that would be the area I really want to buy if it does. So it could work out in my favor if this actually does get flushed down. I still don't have any shares of this just yet. All I've been doing is selling puts, and they've been decaying quite well. So I just gonna choke my profits after 50% decay. Amazon. So Amazon, I do own some shares. I got assigned some shares. I sold a short straddle on it, and which decay fairly well. And right now, I'm waiting for it to come back down a little bit lower. If it comes down to about 80 area, I'm probably going to grab some more shares. I did sell some puts on this, so I could end up with more shares around that 80 area. And right now, there's really no indication of it continuing higher. It's still below the moving averages, and it is still in a very bearish trend. It's no signs of strength. So I am only grabbing shares in increments to have a dollar cost averaging to a much larger position for the longer term. I am doing this only in my long-term account, not in my trading account. So if you're looking just to trade, I wouldn't touch it right now. Like it's at a support area. So any kind of sell-off, it could be bought. But it's not strong enough to break out of the 200-period moving averages yet. It's been tested multiple times and failed. So there's really no sign of a bottom here just yet. But there's a major support, so you can't really short it. So just give it some time, see what happens in this area. This 80 to 90 area is very important support. It can come down as low as 70, which is the low down here. So let's see what happens after that. Meta had a lower high, so it looks like it wants to come down and fill this gap. See what happens when it fills this gap. If it actually holds, it can continue higher. This is the major support right here. These lows on these consolidation lows right there, which is basically the low of the gap. So right here, wait and see. And if you come down, fill the gap, look for reversal for next leg up. Google still base thing. it's bouncing off this 85 to 88 area multiple times now. So it's coming back down to this area. I did sell some puts to grab some shares down here for a first leg. I never got a sign yet, so I'm waiting to get assigned some shares. So that would be the area I really wanted to buy it at, is around that 80-ish area. So if it does come down around that 80-ish area, I'll grab my first leg of shares. I do plan to get in them at the 60-ish area, and then if things get really, really bad, I can buy them at dirt cheap at 50, right? That would be my big leg down here if it does come down. But right now, I'm just slowly layering in very small by selling puts, grabbing premium if they don't get a sign, and if they do get a sign, I don't care. I can hold on to them for longer term. And that's the only way that I'm playing this. Right. Microsoft is actually stronger than some of the other names. It's still holding really, really well. It's still in an uptrend, even though it is start coming down. It's still very strong compared to the other two that we just looked at. So pay attention to this to see if we can hold above 240. If you can hold above 240, you can come back and then bounce and start the next leg up. If it doesn't, if it breaks down, you're looking at this is a key area 230, and then come down to around that teens there, 210, 215 area. And this 200 areas is your key support right down here. So if it does come down here, that's your buy zone. I would grab some shares for longer term down here. Nothing big because as the market's going down, you don't really want to increase size. You just want to get a hint of what's going to come come next. So you just want to slowly average in, waiting for that bottom, and then you get to make all your money. And this is more of a long-term plan. It's not really for trading. If you're trading, you're basically looking for a bottom and then confirmation of a bottom, and then you go in, right? So very key difference between trading and investing. So what I'm talking about right now is more about investing, not really trading. Because right now, the only thing I am trading is just the index, just SPX. I trade the futures and I trade the options. And nothing, I don't trade anything else. Everything else is just for longer term at the moment. All right. So Netflix somewhat broke this uptrend. Is still trending down. It's likely it's going to come back down and retest this low right here at 275. If it actually holds right here, maybe it'll chop around. But things are the chart is starting to break, and there's really no trades right here. Nvidia overextended. I'm waiting for this thing to come back down for a while now. It's still holding really well, mostly because AI stocks are on fire. And was the key area to look at, was around that 250. We're very close to it. If you really want to play this, you can sell a credit spread, like a bear credit call credit spread somewhere up here, and then play the pullback, right? Play the pullback into this 200, 210 area. And if it actually holds 200, then likely it's going to get another leg up. If it doesn't hold 210, it can come down pretty higher, because these stocks go up fast. They come down just as fast, if not faster. Tesla, so Tesla rejected at 220, that 200 PM moving average, which was a key resistance. So you're coming back. It's around that 160 area. So this is a key support for continuation higher. If it breaks 140, it's coming back down to 100, if not lower. So watch this very, very carefully. I would buy it around 150 for a leg. I probably would buy it for 150 at leg, and then I'll add at 100 if it does come down. That's the way I would play it. And I still think that Tesla's great for long-term growth. It is a very volatile stock, and Elon Musk is unpredictable. But when a stock like this comes this cheap, it has a huge following. So whenever things change, sentiment change, this stock tends to move very fast on the upside. So at these key areas, you can go in small, and then once it bottoms out, that's where you really want to add. And there's no sign of it bottom out just yet. It's still very volatile. It needs to consolidate. So hoping to see this thing bounce back and forth between 100 and 200 for a while That way, you'll let all the moving averages come together, get stacked, and then a burst in volume, and maybe we get like a huge push up at that point, and that's where you're going to make all the money. So right here, there's really you're basically just kind of guessing where it's going to go, because there's really no sign of strength other than right here, this burst, it hits that resistance. So whenever Tesla moves, it moves in big bursts on momentum. So a big up move, big down move, and then big up move, right? So just watch this carefully, see how it trades, how it moves. They do have earnings coming up fairly soon in April. Maybe that'll change things. But as far as right now, you're looking at support right around here. So it held pretty strong on Friday, so that's a good sign. But you're looking at this key zone right here for support. So if we measure that move, it's probably close to support zone. Yeah, so it's right around between 0.38 to 0.5. So the support zone's right here. It looks like it kind of agrees with this gap fill right here at 0.618 at 146. So 146, 150 is a good zone to actually grab some shares and potentially get a bounce. If not a higher high, you'll get a lower high, which is still pretty good money if you can trade it. The way I would trade it, if it comes down here, I would sell maybe a credit spread. I could probably do a swing on shares right here because it moves so fast. So yeah, that's the way I would play it. So that's pretty much it for this week. So next week I won't be trading too much. Like I said, I will be stuck in the hotel, so I'll be mostly just watching. If you guys are interested, I'll still be in Discord to discuss some plays. Come check us out on our website, leecapitaltrading.com. We also got a free Facebook group in the description below. And make sure you like and subscribe. I'll see you guys next time.